Hello, good morning. Pier Francesco Gaggi, I see you're connected, but you're muted. If you can, yes.
Here I am.
So, welcome. Just let me introduce to those who have joined us from the beginning at the Trieste Investment Forum. Welcome, and hopefully you will have the endurance to stay with us for the next couple of hours. Those of you who have joined right now, this is the investment forum, the part dedicated more to the banking sector, so to analyzing an open and integrated banking sector within the region, of course, with a focus on Eastern and Southeastern Europe. Let me introduce you to our chair, Mr. Pier Francesco Gaggi. He's head of relations with EU associations and international affairs at the Italian Banking Association. Welcome, Piero.
Thank you.
We have also some very interesting keynote speakers. First and foremost, Mr. Safet Kozarevic, professor of Faculty of Economics at the University of Tuzla. And let me also welcome Mr. Spiro Brumbulli, Secretary General of the Albanian Association of Banks, Mr. Vladimir Vasic, Secretary General of the Serbian Banking Association.
Hi, hello to everybody.
Yes, and last but not least, again, you're just in alphabetical order, so there's no discrimination. Ms. Stanislava Zavravec, I hope I'm pronouncing it correctly, Director of the Banking Association of Slovenia. So welcome to you all, and I would just maybe give the floor to Pier Francesco in order to introduce our session. Thank you.
And thank you to my colleagues in the panel, Professor Kozarevic, and my colleagues from the Banking Association of some of the EU Balkan countries. Given the current economic situation prompted by the COVID-19 pandemic, banks are more critical to society than ever before, with the support of businesses experiencing funding shortfall, minimizing the scope of insolvencies and unemployment, and assuring the continuity of essential services for companies, employees, and families. While the health crisis is still ongoing, but we hope it's now on the ending side, public health remains the main focus. At the same time as governments, businesses, households start to look beyond the crisis, and business strategies adapt to survive and to thrive in the world beyond the crisis. And it becomes important to assess what kind of financing Europe's companies will need for recovery and how banks can meet these needs. Europe needs a sustainable, fair, and inclusive recovery. The crisis has reconfirmed the importance of investing in activities that generate value for the society, be it public health, employment preservation, crisis prevention, or environmental priorities. Moreover, recovery must be fair and generate prosperity for all citizens across the EU. Banks are committed to being a critical part of this recovery. As a contribution to this process, European banks consider the following components as fundamental elements of such a recovery. First, accelerating the twin revolution of digitalization of the EU industry and transition towards a sustainable economy as a propeller of recovery. Second, improving smaller companies' access to funding. Third, avoiding disruptions in export finance, and then diversifying the sources of corporate funding and innovation. Most important is the impact of the new Basel framework on the availability of SMEs funding, which is postponed. You will know that the Basel Committee took this decision of postponing the finalization of Basel III. And this is followed closely by the technical adaptations needed in the EU rules implementing the current Basel framework and related relaxation of the capital, liquidity, or accounting rules, which have to a large extent been implemented but must be followed through. You will know that fortunately this phase of stress on the banking activity has found an important support by the public authorities, by the supervisor in the European framework, who decided to relax some of the requisites, some of the requirements concerning the capital adequacy, the liquidity adequacy, and other parameters that are usually in a normal time stricter than they are now. As banking associations which take part, who are part of the European Banking Federation, we, in this frame of the European Banking Federation, we have been a long-standing supporter of an optimal prudential framework that achieves stability, safety, and financing capacity at the same time. So I would like just to underline some of the points that I have already anticipated, but what is in our opinion very important, and I will touch on a couple of them that I consider mostly relevant. One is the ability to create a new condition for the banking for the European economy in order to build up more resilient corporates and more resilient societies. COVID-19 has exposed the lack of resilience in many European companies. Reserves were not sufficient to cover more than a short period of stalled activity. In addition, COVID-19 has exposed also the weaknesses of supply chains and the overexposure of the value chains to key components coming from third countries. So companies may need to lessen this dependence, especially as member states and the EU take action to support the local economies and the relocation of businesses and factories in the EU in order to increase the resilience and sustainability of supply chain. This trend may be particularly relevant for essential goods and services such as healthcare, but also may be adapted more generally. What is also fundamental is to boost the digitalization of all EU businesses. So what has been forced by the COVID-19 in terms of digitalization of companies must not be stopped, but must be increased. And I'm going to close with a very last but fundamental point that banks are now working on, but all the financial world, as we heard before by Mr. Galateri, for those who have taken part also to the first part of our meeting. Also, the insurance companies are pushing very much on this point, is sustainability goals, climate change and sustainability goals. Banks are looking very, very deeply to this point, both, I suppose, in all the national frameworks, but at European level we are working hard on this, and I think that soon we will find interesting results coming from this specific attention to climate change mitigation and adaptation. I would like to stop to pass the floor to Professor Kozarevich. Thank you, Safet. He will give us an interesting overview of the banking sector in the Eastern European countries, Central Eastern European countries. Thank you, Safet.
Thank you very much. It's a pleasure to see all of you again, and I hope next year we will have a chance to see in Trieste again, since we all miss Trieste, I suppose. For me, it's really so. Since we have time limitation, I will use a presentation just in order to save time. We have a lot of data. We cannot comment all these data, and you can see them on the slides. Actually, I will try shortly to present survey we have done, results of the survey we have done. Actually, we were working on it since December of 2019, and we collected data about financial service sector of the Southeastern European countries, from Slovenia to Turkey, and this year we included also Ukraine. So we completed all official data for these countries. You can find the individual countries report in the second part of the report, and in the first part you have comparative analysis and some additional topics that are explained in the report. And these reports are available on the web of ANIA of FEBAF web page. So I will just do quick comparative analysis and present some my views of the impact of the COVID crisis to the financial service sectors of the Southeastern European countries. So at the beginning, just a few macroeconomic issues. First, population. For these countries, since 2002, we actually have trend of depopulation in all countries except in Turkey. And at the end of 2018, we have total population of 185 million. It's about 36% of the European Union 28 population, which was 513 million. We had a total GDP for these countries on the level of 1.4 thousand billion euros, and it's only 8.8% of the European Union GDP, total GDP. All the countries in 2018 had a growth in the GDP, and average GDP per capita was about 7,600 euros per capita, and it was actually 4 times less for the European Union, which was about 31,000 euros. Based on all these data, we can notice that the region is consisted mostly of underdeveloped economies with high unemployment rate, especially unemployment rate of the youth population. And on the slides and in the book you can find details about any specific countries, but on the same time in the European Union, average unemployment rate was 6.8%. We also have data about inflation rate. It was between 0.6 and 4.6 for all countries, excluding Turkey and Ukraine, which had a much higher inflation rate. Regarding banking sector, as you know, these countries are different level of introducing Basel standards. Some of them already implemented Basel III standards, some are in different phases of this process. But generally, bank assets, if you look at as percents of GDP in the countries, at average of 96%. So in comparison to the European Union, it's actually almost 3 times less. Since in the European Union, we had 273% of GDP in bank assets. We can see from the figure 8 that we have trend of increase in the total banks assets in all countries except Greece, Slovenia, and Ukraine in period between 2012 and 2018. There are different reasons. We don't have time to explain all details, but we also can notice a number of banks. It's between 10 and 77 10 in Kosovo and 77 in Ukraine. We also have data about average assets per bank. It's average for the region about 3,700 million euros, and it's 3.6 times less than in the European Union. We also have data about average assets per bank in period 12-18, and we can notice that in all countries, that average assets per banks decreased only in Greece and Turkey. There are also data about market share of the largest 5 banks, with Greece with the markets, the highest level of market share of 5 largest banks, and market share of the largest banks with the Albania, Greece, and Ukraine with the highest share of the largest bank. Regarding the share of banks with the majority foreign ownerships, in total assets, we have that the largest share we have in Croatia with 90%, followed by Kosovo and Montenegro. The lowest share of the foreign ownerships is in Turkey and Ukraine. About composition, we have domination of cash funds and, we have domination of net loans in the composition of banks' assets in almost all countries. We also have in the bank's liabilities domination of household and corporation deposits, as well government deposits in the banking liabilities. We also here can find details about maturity structure of deposits, where we can notice that we have dominance of short-term deposits in all countries except Albania, Bosnia, and Croatia. We have half by half, let's say. Maturity structure of loans, also we have dominance of long-term loans in all countries except Romania. And we also have data about currency structure regarding share of deposits in local currencies and the other currencies. Actually, we have a domination of deposit in local currencies in all countries, but the highest level, except in Serbia, where we have the lowest share of local currency in structure of deposits. Similar with loans, we have also situation then for the loans, the share of loans in local currencies approximately on the level 50%. But of course, all these details needs more time. It's only important to say something about capital adequacy rate, since this is the most important parameter of the banking for the banking sector, and this ratio is between 15.6% in Montenegro and 23% in Croatia. The highest ratio of non-performing loans to total loans was in Ukraine 53% and followed by Greece 45%, while the other countries have the lowest ratio of non-performing to total loans. The lowest was in Kosovo with 2.7%, while in the European Union we had 3.2% in 2018. Regarding the return on equity, it was positive in all countries. Only Greece had minus 0.3 return on equity in 2018. The highest was in Kosovo and followed by North Macedonia. And we also have details about the share of liquid to total assets and liquid to short-term financial liabilities, where we have highest ratio in Romania and Ukraine. Of course, all these details, I don't know, did you catch all these information, but you can find them in the reports. Summary, we can say for these countries that they are bank-centric markets, where the banking sector has a very important role in the total economy, especially in financial service sector. We also can notice that for all these countries, we have high capital adequacy and liquidity of the sector, and the banking standard Basel III requirements will be, sector will be most, let's say, resilient when all standards will be fully implemented. Also, reduction of NPLs is necessary, and we have still NPLs unevenly distributed from 2.7 in Kosovo to 53 in Ukraine, and also elevated for some countries. Now, regarding the impact of the crisis and on the economy, and especially to the financial sector service, there are just a few issues I want to stress. Since March 11, when the coronavirus pandemic was announced by World Health Organization, because of geographical spread, not because of severity of the virus. But we actually, authorities, all countries faced new, large, unprecedented risks, and they introduced different measures in order to stop spreading of the virus. And then actually, most measures were focused to suspending high-risk economic activities, actually to stop virus spreading. And one of the measures was also social and physical distancing and isolation. But the level of implementation, different measures were not the same in all the countries of Southeastern Europe. So we have actually dilemma to use principle of universality or the principle of individualism. So actually the question is, should we manage the risk, or should we, as a precautionary measure, eliminate the risk, but take and generate something new, which can be on an unimaginable scale. So it's suggested to use a LARA approach, that means as low as reasonably achievable. Actually, isolation without stopping the economies. That's the strategy the most of countries use these days, but the mass spread of the virus still hasn't been completely avoided, and we still have a threat to our health system as well to the economic system of these countries. And the countries actually made people to change their usual patterns of behavior. And because of that, we have a fight to liquid assets what makes impact to the financial markets. So actually, it's expected that the crisis will trigger a recession. And as we know, previous predictions of IMF was about 3% for the global economy of the shrink, but the last predictions of World Bank are higher, for 5.2%. So actually, what will happen, and it depends at least the most of duration and depth of the crisis, which depends of the vaccine. So this is typical situation what we have in the Southeastern European countries. What have been done in financial service sector? Most countries introduced moratorium to the credit payments to banks and to the other financial institutions in order to provide, let's say, a kind of survival to the companies, and during the state of emergency or even till the end of 2020s. That's the first measure. We have general problem with loan quality deterioration because many SMEs have problem with their business. There is also a threat that deposit could be withdrawn from the banks because of job losses, because of fear, because of panic. We also have problem with slowdown in banks' lending activities because of problem and because of slowdown in economic activities. Because of low interest rates, we have actually a monetary policy with low interest rate causes the decline in net income by taking on a higher level of risk. So banks have a general problem with this monetary policy, and access to international money market also led to a slight rise in the interest rates and tightening lending conditions. Regarding the other financial services, we can expect declining demand for additional type of insurances apart from mandatory, and we have a similar situation in the other financial service institutions that also could be expected decline. And finally, what banks do in this region? Actually, they have to think, as Pier Francesco said, they need digital transformation. That's something what bank should provide, but the lowest fee charging of customers. That shouldn't be at the higher prices. They have to change and follow and make research of the customers' behavior. Actually, they need proactive responses to all these changes. So also they have to listen what SMEs and provide more flexibility to our SMEs that face reversible or removable difficulties, and they can continue their business by the pandemic. And they also had to think about strengthen their capital adequacy, and of course they have to think about strategy, how to mitigate supply chain disruptions, which was the problem, especially at the beginning of the crisis. And of course, continue with risk management implementation. That's typical activities that have been done on financial service sector in the Southeastern Europe. Of course, that's just a resume of my presentation. And now stop sharing.
Thank you, Safet. Very comprehensive presentation. You rightly underlined the importance of capital adequacy. Let me also add about this point that capital adequacy is especially important when we incur in such periods like this one, where you as banks, you have built a sufficient amount of buffer that allows you to also to accept more difficulties. But it's also important that in such time like these ones, banks use these reserves. And you know that to this extent, supervisors and the authorities who supervise banks have given their support to more flexible use of the buffers built until now. And unfortunately, the market forces tend to make banks to bring the banks to more prudent stances, so that they do not use enough the buffers they have built. Some minutes ago, Mr. Enria, as head of the supervisory board of the ECB, has released press release just announcing that he would like that banks make use of their reserves in such times, because now it's time to use them. But of course, banks are also refraining from this, because the market, then rating agencies and also investors judge by a different metrics what they do. Sorry for this long comment remark. After this, I would like to give the floor to Spiro Brumbulli, who is Secretary General of the Albanian Banking Association. Do you hear us, Spiro?
Mr. Brumbulli, you have to switch on your micro. Switch on your micro.
Okay. Now, do you hear me?
Yes,
Yes.
yes.
Okay. Good afternoon to everybody. Thank you for the participation to this forum, that is webinar this time, because of the situation, unprecedented one, not a little one, but it's unprecedented one, with by dimensions and time and including all the world, not only some specific region. In my speech, I will explain in three different, let's say, parts. About the first one is characteristic of Albania, what makes Albania a special one amongst the other countries in the region. The second, what is the banking industry doing? And the third, what are the challenges? I listened very carefully the first panel and the panelists who analyzes from the geopolitical point of view what the region is among all the world. To me, I will bring that in micro level, that to see what is Albania among the region, in the Western Balkans, amongst the other countries. Of course, that impact of the COVID, that will be different across the regions. That because of how deep that the virus was in the society, what the level of development of the country is, and what the geographical position the country has. The Western Balkan and the Mediterranean region have different characteristics. Significant losses we are expected in tourism industry as the most affected sector. But the same, I think, that will be for Croatia, Montenegro, and Greece. In Albania, the tourism industry is contributed 20% in the GDP. Moreover, in Albania and Kosovo, remittances are also projected to decline. Albania has two other disadvantages. A few months ago, in the end of November 2019, it was hit by a deadly earthquake causing serious damages. And B, it is the country with the highest level of public debt compared to the other countries in the region, after the Montenegro. It is also worth mentioning all the problems that neighbor countries have encountered, such as Italy and Greece, and also significant slowdown in foreign direct investments inflow, which is expected to affect almost all the countries. Under these circumstances, Albania expected to have a recession of -5% to -9%, one of the worst affected countries. But what about the banking industry? What is special about this period is that the banking sector still remains very sound. Mr. Kozarevic just mentioned some figures which are a little old, belonging to 2018. Allow me just to refresh and update those of the current situation. We have completed the consolidation in the banking industry. There are 12 banks instead of 14 that was in presentation of Mr. Kozarevic. There is an increase in the weight of local banks. 4 out of 12 are local banks, having 30% of the market share. 6 banks are from EU countries, having 43% of the market share. So EU-based banks seems to be enough stable and maintaining the leadership in the market. Non-performing loans are written off from the balance sheet. Roughly 500 million euro are written off during the last 5 years. Well capitalized. Capital adequacy is 19%, is the second in the region after the Serbian. High liquidity. Loans to deposit is less than 50%. Non-performing loans is 1 digit, 8.2% as per February of this year. Return on equity is 12%. There are 6,400 employees working in this industry through the network of more than 420 branches. So this is the overview of the banking industry. And what is more important is that there is no risk related to financial sustainability in the banking industry, which owns over 92% of the financial markets assets in the country. Having a closer look at the composition of the loan portfolio by sectors of the economy, the top 5 most funded sectors are wholesale and retail trade, around 24%, construction and real estate, 11%, manufacturing, 10%, electricity, gas and water supply, 8%, services and other sectors, 5%. So far, banks have made a direct contribution to the postponement of loan installment for all individuals and business affected by COVID-19. Only for the first 3 months of this postponement on the installment, the real effect in the economy is around 75 million euros. So all this money that is not collected from banks from the installment is on the hands of the borrowers. So extra liquidity in the market. Another 3 months now is already approved for the new postponement up to the end of August. The banks have also been supported by the government with the 2 packages of sovereign guarantees. For loans to be granted to business, they are objectively incapable to pay salaries for their employees for 3 months, as well as another guarantee for recovering activity. I think we are in line with these policies with the other countries in the region. We are in the situation where the economic recovery will be crucial for the performance quality of the loan portfolio. Following the 2008-2010 crisis experience, the banking industry would hardly support another increase of the non-performing loans. With the central banks, we are considering the possibility of easing austerity measures to prevent banks from calculating provision during this period. And there are some already measures taken by the central bank. Since 2/3 of the loan portfolio belongs to the business entities, the performance of the trade, manufacturing, and services sectors is to be closely monitored. Banks are in continuous contact with the business, analyzing the difficulties that such business are likely to experience during the recovery period. Individuals which belongs to the retail loans, which with retail occupying only 1/3 of the total loans portfolio, are mostly mortgage loans, the performance of which has been one of the best so far. With the postponement of the 6th installment, it is considered that the situation will be improved, and we expect retail loans not to be the main problem. Moreover, a new guideline is approved for online payments of up to 160 euros to be executed commission-free for customers. It's just the decision taken by the central bank and will start on 1st of July. So whatever that online transaction, up to 160 euro will be free of charge. Banks offer e-banking, mobile banking, online services and information. 11 out of 12 are offering all of these products and services. But the development of e-commerce, which is still in its first steps, remains challenging. Even during the pandemic period, there were good efforts to improve and to expand the e-commerce activity. But as the English expression says, every cloud has a silver lining. According to international institution, 2021 is expected to mark the highest projected growth in Albania.
Spiro, apologies, but we should try to the conclusion because we are a bit late. Sorry.
Okay. Construction project earthquake affected areas will give new impetus to the economy. I have to go faster. Okay, let me to finalize. The challenges still remain. In order to have an efficient banking sector and a solid one, we have already identified a few challenges, which are not only for the banks, but even for the whole country, for the economy and society. Strengthening institutional rule of law. Justice reform, which is undergoing. Reducing informality. The total level of shadow economy in Albania amounted to 22% of GDP. Improving business environment. Albania is the last amongst all the other countries ranked to this doing business. And the last, I would emphasize implementation of the new payment service law, which is a transposition of the PSD2 directive, development of synergies with fintech companies. So let's me to finish here. That's what I wanted to say. The last is good that we have the chance to share the experience and to listen even the other countries what they are doing, that being together because there is no experience before to implement under this situation. So listening to each other and sharing the experience is the best communication to and the way to overpass the situation. Thank you.
Thank you, Spiro. So at the end, we come back to the statement, never waste an important crisis, as already somebody said. And now I would like to pass the floor to Vladimir Vasic, the colleague who is Secretary General of the Serbian Banking Association. Please, Vladimir, take the floor.
Thank you, Piero. In Serbia, first of all of us very fast adapted to the new circumstances. I believe the economy will do also the banking sector. And even we are sitting together today, but on different location, and we are thinking that we are in Trieste, like Safet said. So I hope so that okay, this way of doing the conference is very nice, very effective, but I always prefer to be together. So hope so that next year we'll be together in Trieste. When we're speaking about the economy of Serbia, so I just divided in three parts of my speech, my presentation. So it's we together, we as a Association of Banks of Serbia, but also all banks together worked a lot of activities, but focused with cooperation and coordination with National Bank of Serbia and Ministry of Finance. So the outcome of this cooperation is, let's say, we have the decision of temporary measures for preserving financial system stability. So in a normal way, it's a moratorium on all the payment during the 90 days. And the other one is decreased on guarantee scheme to support the economy through the credits, adopted on April 16. And we have result, the bank sector, yes, the loans are, well, it's 1 billion euro request up to now we received, then the scheme is about 2 billion euros. It's should be give to the borrower up to the end of the year. And what is the point inside of this guaranteeing scheme? It's 480 million euros. It's guaranteed by the government of Serbia, and it's somehow it's a bridge between the banking sector and the clients from the other side. So I believe the results are visible, and I believe that this 2 billion will be launched up to the end of the year, as is defined in this decree on guarantee scheme. For the banking sector and in Serbia, well, it's more or less, as Safet said, the similar situation is in the region. I'm always saying that we should be positive and we should find the new way of doing the business, or reshuffle the business, or reshuffle the management, just to try to find some new opportunities. I'm listening a lot of economists all those days, and then they're saying, okay, it's when you're saying, this is investment forum, when you're saying that the GDP will go down and so on, you're sending 10 messages, but 9 are negative. So we should be very cautious when we are saying or sending the message to everybody. Okay, the statistics is there, but I always saying that something's happening around us, and we should use this opportunity. In my case, my son is using online all the time. So each day, 2 or 3 of them are knocking on the door and bringing something. So then I saw the statistic of online sales. It's jumped 60–70% compared to the same period the last year. So it's happening. Something's going on. That's positive side of the COVID. Even myself, but I'm not so much fan of buying goods through the online. I admit. But okay, during this COVID pandemic, we ordered a few times the food through the different applications. So I asked my friend, are they doing the same? Yes, they are doing the same. So I believe that even today we are using this, even if they are free to go to the restaurant, bar, but we are from time to time ordering through the online. So this is, for myself, I said this is a positive. When we're speaking about the climate of Republic Investment Climate of Republic of Serbia, Spiro just mentioned that capital adequacy ratio, we are first one in the region. Our NPL is, according to last review, it's 4%. It's good that some foreign institutions give the, let's say, for the investors, give the green light in terms of confirm the BB plus rating. So it's almost investment rating. And this balance between the economy, okay, the fiscal, monetary activities and the last few years GDP, well, in average increased 3 to 4%. So this is something which is positive. And when we look some forecasts, the EMF also said, okay, we're expecting the 7.1 for the next year. I could be cautious about that, but 5% could be the achievable. So when we're speaking about what is the future of the economy of Balkan region, recently European Commission published a roadmap for recovery towards more resilient, sustainable, and fair Europe. I supporting maximally because the green transition and digital transformation will play a critical and priority role in the relaunching and modernizing our economies. And well, it's also there, you know, before we spoke a lot about digital transformation, but then for these 2 months, we speed up the process, and even the government, even in Serbia, even that we had a lot of result in moving toward the less paper and then communication with government online. Now we saw that they open the hands and say, okay, guys, please come to us and say what can we do for you. So this is a positive from this aspect. I could say that financial sector will play important role ensuring access to the finance. Serbian banking sector is already fully integrated in the digital transformation and is giving a significant contribution to the whole economy and society, particularly to the sector of real economy and SME, and in the light of recent government measures. So hopefully.
Can we ask you kindly to wrap up? Can we ask you to wrap up? Thank you.
Sorry?
Can we ask you maybe to conclude as soon as you can, because we have another speaker?
Yeah. Okay. So I finished it. It's here. Just a message that we should use it as a positive. So investors are listening to us. Please welcome to Serbia. Banking sector is stable. We are ready to support you. Thank you.
Thank you, Vladimir. And now I will switch to Stanislava. Stanislava is the Secretary General of the Slovenian Banking Association, and I wish to thank her for accepting to intervene to this forum. Thank you, Stanislava.
You are mute. You are mute, Stanislava. Still mute. You should.
Can you?
Okay.
Do you hear me now?
Yes.
Now, yes. Okay.
Yeah. Okay.
Thank
Sorry
you.
for that. First of all, I would like to thank you, organizer, to invite Slovenia to take part in this event. Good afternoon to everybody, also the ones that are following us over this digital tool. I really liked, as many others, the saying of never waste a good crisis. If we look at the banking system capacity to finance the economy, we can say before the COVID-19, we can definitely say that the previous crisis was not wasted, since the capital was substantially more robust, and the liquidity ratios were absolutely unprecedented historically, comparing all across the Europe and also all across the Balkan, South Central Eastern European region. And in this respect, one could say that the banking sector was in a way well prepared to weather the crisis, not just to weather the crisis, but also to service the needs of the economy. While this COVID-19 was exceptional in terms of not only being unexpected, crises are unexpected, but specific because it has really resulted in a complete closure of majority of the businesses for a certain period of time, almost globally, definitely within the Europe and almost globally. Nevertheless, the consequences are also unprecedented. And that's why we are of opinion that the reaction this time of monetary authorities, supervisors, as well as, at least within the EU, of European Commission, and on the basis of that of national fiscal authorities, was this time really quick and fast. Even though one would say that the banking system is robust comparing to the previous periods, these measures were extremely important to our view. First, they are addressing the immediate liquidity need, and moratoria that was decided either by private sector or through legislative or similar measures will definitely impact the liquidity of the banking sector, but nevertheless, since the liquidity was really very ample, this will not have an important negative effect on the overall capacity of the banking sector to lend. On the other hand, even though many countries, including Slovenia, took many measures to preserve the employment and to preserve the capacity of the economy for capital formation, and there will be gradual recovery taking place that is very uncertain in terms of the speed. And even though the capital of the banking sector is more robust than it was 10 years ago, the size of the negative consequences on the real sector, some of the branches, is very unpredictable, and therefore the measures based on the European Commission framework for state aid are seen as a very, very appropriate and also will help the real economy to weather and not to this liquidity drain. It will also help to access the financing for the gradual recovery and also new investment in a longer term with the guarantees of the national fiscal authorities, which is absolutely an important measure, not only for economy, but also for indirect positive effects to the bank's balance sheet, meaning that banks will be more able to support the needs of the economy in a longer run as well. Now, we are sure that there will be some increasing non-performing loans as well, resulting in the bank's balance sheet over a longer period of time. Because as said, it's very difficult to predict which will be a final consequences of this tremendous shutdown of business activity all over the world. But nevertheless, combined with more robust capital levels and these measures that were taken by national authorities and also by the European Commission in terms of framework will help. So the support of the banking system to service the real economy and Smes and also the population should be in place this time. Banks should be in a position to be part of the solution. On the other hand, there will be also obviously negative effects on the bank's balance sheet, but even more important, we think that there will be a certain structural changes in the banking taking place. And going back to the never waste a good crisis, it should be the case. The three were already mentioned, and we see these three as well as affecting heavily the business models. And these are digitalization, cybersecurity, and taking the measures for boosting the shift to sustainable financing of the economy while providing these huge resources also on the European level for recovering processes of the economy, as well as given the priorities that are also focusing at the green and sustainable. Given the time, I would stop here because we are running rather late, and eventually give some space for some questions if there are. But these three elements should remain as an element of crisis not being wasted also this time.
Thank you, Stanislava. Yes, there is room for some questions, not so much room, but if you have questions to raise, please address them to Manuela. And Manuela will keep them and address them to the speakers.
If there are none, I may collect some of the questions I've seen coming up, and most of them concern basically the resilience of the banking sector in Eastern Europe. So maybe a quick reply, small sentences by each one of the speakers. If you can pinpoint in your preview how resilient you will see the banking sector in your countries be in the future, in the aftermath. You've already explained, but maybe some of the questions pinpoint more to the capital adequacy, to the rules that will come also at European level, and how you will see it evolve in the future. That's a sum up of the questions received so far. So each one of you, a few replies.
We have 2 minutes in total.
Yeah.
No more.
So maybe we start from the last speaker who had less time.
Yeah. Okay.
Stanislava, maybe just a reply on the resilience. You mentioned it already, but your preview.
Yeah. Thank you very much. In terms of, the banking sector is going to be affected by liquidity, and Slovenian banking sector liquidity ratio was 320. So that was a really very robust. The capital adequacy at the end of 2019 was at the level of average of EU, which was a bit lower than 19%, but the structure of capital is basically tier 1, CET1, so very robust as well. Nevertheless, the measures that were taken by the states will also support heavily this robustness to remain in place for the future, for preserving the capacity of future financing.
Perfect.
Thank you.
Thank you very much.
Okay. I will just show the slides. You can speak, I will show the slides regarding this.
So you should, yeah. Maybe Safet is better to move to Mr. Basic, and then maybe to come back to the slide. We have no more than 2 minutes in total. So
okay. Great. Shortly, just shortly. According to Basel, capital adequacy is 8%. In Serbia, minimum standard is 12.12%. So in average in Serbia is 22. So we have, if you think that we have this buffer, and it could be used for the intervention on the capital side. So that's it. Thank you.
Mr. Brumbulli, you are the last.
I will not to repeat, but it's the same situation. We are very well capitalized. We have now the experience from the past. We dealt once with very high NPLs, and we brought that down, and nothing created any panic, any negative situation to the economy. The banks were really strong enough. They supported all the losses for the non-performing loans. So now they are much better prepared to face if there is something that never happened, but we have to be very conscious on that.
Perfect. Thank you very, very much, Pier Francesco. I would give you the last word. The floor is yours to wrap up the session. And to the speakers already from FEBAF part, many, many thanks for participating. Piero, the floor is yours.
Thank you. Well, just to say what has already been said by the colleagues, that despite the crisis, banks in, let me say, in all Europe, but especially we heard in this area of Europe, banks are very resilient and are ready to face the difficult times that we will have in front of us, ahead of us. Because unfortunately, we cannot ignore that it will be very tough in the coming months. The economy will suffer, households and corporates. Markets are not yet ready. Capital markets are not yet ready to assume their role, their natural role that we would like as banks that could grow, and we are working on this, but of course it will take time. And so it's common opinion that in general the banks will have to bear the onus of this, will have to support the economy as much as possible, and we are glad to hear that they are ready to do. So thanks to all my fellow colleagues again, and to Professor Safet. Now I'm brought to call you Safet. Professor Kozarevich. Thank you all. Bye.
Thank you.